guess I don't need this. Alright. So, morning. Let's see. See if I can send this link out to a couple people. Alright. So, let's start from the daily. What are we expecting? Wait one sec. Not in any rush really to get started today because Friday. So a lot of movement to catch. If there's a lot of movement to catch. Alright, so alright. This daily time frame, realistically speaking, it's a bear chart. Where we want to start from is what range are we in, right? As a scalper, really and truly, you could look at it as somebody who is a trader in general. You either look at it and say, okay, where is the yearly? Last year's open, and where are we compared to the range for last year? 2024. See the low of the year. It's down here. Alright, the low of the year is somewhere down here. So that's the we're in the upper part of the range, right? What I like to do is look at the past quarter. What are we doing for the last past quarter? So January, so that'll be December, November, and October. So the range for the last quarter. So October is right here to here. That's what happened. So we were at 50%, or let's put on the middle line. Make white. Alright, so we were at 50% of that range, and we started to expand higher from there, right? If we're supposed to exit this range, obviously the liquidity would be at this high. Obviously the liquidity would be at that high. It's also obvious that these are low resistance liquidity, which would mean that this is the original accumulation of a market maker buy model if it was supposed to exit the range. So what we're supposed to be, if that's the bias that we're going with, right? Let's say we're going with a bullish bias. There's supposed to be some sort of smart money reversal here. There's supposed to be some sort of smart money. Actually, I like the opposite, you know, like this being a red instead, or some sort of neutral color. Let's go with neutral. Alright, some sort of smart money reversal around that area, right? And we would want to also look at ES and see if ES is having some sort of SMT around these areas. Let's try and find ES. Okay, so we have the same lows being taken out, all the lows being taken out by ES. Is there any difference? This is the November the 19th low. November the 19th low not being taken out. So we know that there's some SMT right here. So we know that there's some SMT there. Let's put it as SMT. Some SMT there, right? So it's obvious that SMT occurred, the smart money reversal occurred on ES. ES. Yeah, so it happened down here, somewhere down here. M5 area. Let's go to M15 now. That area. Yeah, smart money reversal. Yeah, very important candle. Stone candle right here. Yeah, and we lift off from there. So we're in a smart money reversal right now. Okay. So trying to get all the way back to NQ. Alright, so yeah. On the H1, I don't normally use the daily, by the way. No, I just normally I'm a H1. I use the H1 as my daily, basically. So we have some reversal here. Everything looks right. Everything looks correct to me. Inversion. Yeah, never exit the range. But realistically speaking, this candle right here. So in my trading, there's specific things that I look at. For example, I look at the fact that this was a low right here, right, and the range that pulled into the liquidity or drove into the liquidity is a very important range. So the idea is that this entire range right here is important. Us closing above that range, I'd start to look at this range here as an OB, an order block. So that must mean that if this is creating a fair value gap right now, this is a accumulation candle, meaning that I'd like to see both sides of this candle be taken, or at least a trade to the open price. Yeah, at least a trade to the open price of the candle. So both sides being taken. So that's why I'm not really in such a hurry to get into this, because I expect both sides of this specific candle to be taken. right? But obviously, if I expect both sides of this candle to be taken, what does that make this candle? It makes it an accumulation, because that's what you would have want. That's what you'd have want two sides taken. Anything that you want two sides taken, it's an accumulation, buy side and sell side being taken, right? So that's how I'm looking at it. We know that there's an SMT at the lows already, for a big SMT at the lows already. Don't really use M15 that much, to be honest, or M30. But I look at it and try to figure out if there is some SMT there between ES and NQ. There shouldn't be. Because there's just been higher movement. There hasn't been any type of stalling in price for that to happen, right? So there's not much SMT here, so we don't really have to pay attention to NQ. So, all right, the largest range for the day. So this range has to be important. This range has to be important, somewhat important. Has to be somewhat important. Let's go back to the H1 though, because we weren't necessarily finished there. Alright. So in looking for targets, the last area of liquidity in this range, because I do believe that areas that have liquidity don't have liquidity, areas that took liquidity don't have liquidity. So the first area of liquidity in this range, or the only liquidity left in this range, would be here for me, or in my eyes. Boom. So that would be a liquidity target. Right. Alright. And 5 again. This is just rally. Just rallying. We're literally just rallying here. Friday is the day for that stills. There's absolutely nothing for me to do here. There's nothing for me to do here. No high probability. The market has just been rallying. 9:30. Let's see what 9:30 does. We'll make a decision. Let's see what 9:30 does. I always enjoy looking at areas where we had failure swings or failed closes. So like this, closing above here. I like this candle. I like that candle right there. So that's like a marker, a mile marker. My eyes. Let's use that as a litmus test for the market. Are we trying to get below this, or are we staying above it? Because I do believe that if we try to get above this, if we get below this, we are aiming for an area where there's sell side liquidity. There. Or it could even go down to here. But that would be the first target. So let's see. We're 9:30 in, so see you at 9:30. I'll be back soon. and see the price actually leave this area. Seconds to drop. Alright, we're inside there. Let's look at the M1 and see what's going on. If we're bullish, I'd like to see immediate bullish price action from now. If we're bullish, I'd want to see us leave the area right now. We close beneath there. Close beneath this candle and this candle. I'm bearish. As it is right now, I'd like to see bullish price action. some that I like to see, stuff that I like to see. Yeah, I'd be short here. I'd be short there, and my stop loss would be here, above 50% up there. Obviously, I'm taking one contract off. I'm taking one off once it gets to the low that I'm aiming for. This low right here, the first liquidity pool that I highlighted on M5. This one right here. So I'm not looking at this fair value gap as something that should do anything to price. This is the low that I want. Come here. One time you have to type in instructions for your come here. I'd short there again to be honest, but I'm not gonna add leverage. I'd short right there again, but I won't add any more leverage. What's that stop? How much is that? From my entry to my stops is 23 points. It's 23 point stop. It actually looks like it's something like this. That's my stop right there. I was targeting here. That's my first partial. But down here is where I would want to really. So that was just some reaccumulation, I guess. Reaccumulation inside of the OB right here. Realistically speaking, I guess that's what I should have waited for, but because I didn't want to see this candle filled, or I was using the body of this candle as like a litmus test to see if the willingness of the market to go down. So I just wanted it to just wick there and go lower. I was really watching the breakers here, so discount to the breaker, premium of this breaker right here. From here to here, this accumulation here. So I went there. It's a bit lower than it, but yeah, around there. Boom. Tapped into it. Right at the red line and then lower. So yeah, where am I taking some out? I'm taking some out beneath this low. You see, so I wasn't really afraid of the accumulation or the retracement, because I wasn't afraid of the retracement, because in my eyes, this is the only place that has liquidity, and if it's good expanding, it's expanding for somewhere a liquidity pool, right? It's not an imbalance, so this was not it. So that's now when I want to pass the area that I want to see, that's when I go break even. So I took $28 off of it. It took $27 off of the markets, and I'm holding $31. And I'm looking for a target. If this is bearish, if this truly is bearish, where could we heading to? TP. Alright, let's get here. Let's just get here. Let's just get here. $126 is fine. Oh, $63. $63 is fine. I'm fine with $63. Or what I love to do is just here to 50 points. Boom, that's 50 points right there. So now, since that's 50 points, I'm bringing my stops down. 50 points in. I don't care what happens. I'm just trailing. I'm trailing. And I don't care. Boom. So said, so done. Alright, so this is the overall trade right here. And yeah, that's how I do it. We really and truly wanted just 50 points. So boom, we got over 50 points in this candle. Our exit in this candle is right at the low. So realistically speaking, we got 56 points. And overall for that trade, we would have made over $70. Over $70, 50, yeah, over $70, close to $80. But yeah, that's it, and that would realistically be my only trade for the day, because I don't need. This is just I'm just aiming for 50 points a day. This is the setup for 50 points, and I executed, and that is that. And I would be just done for the day right there. Okay. Really and truly, based on what's going on, I'm anticipating lower prices, but I don't really care what happens. To be honest, it's a Friday. Yeah, it's a Friday. I don't really care what happens, but I would be anticipating lower prices, even though I'm exiting my trade at 50 points in profit. I'm just exiting at the lowest hanging fruit, which would be this liquidity pool here. That's just obvious. The next place to look for liquidity would obviously be here, this area. If we can see closures beneath this area right here, bearish closures beneath this area right here, then I'd say that retracements could potentially be still bearish. But if we wick there and then start to see a reversal, then then closures above this imbalance here, any closures above this imbalance would indicate that we are bullish, and I'd more than likely use this as an inversion if we were supposed to switch and become bullish. It's inside of our key level, as well as it would be an inversion fair value, so it'd be something that looks like this. Boom, and then obviously if we're buying, this is a buy model, we can look for the original accumulation here. We can low resistance liquidity. Where's the liquidity? The liquidity is beneath here, so after that we just go there. So the liquidity is beneath here, smart money reversal beneath here, or in my case, for if it's not gonna get to there, in my case, since I took my profits here, and I believe that is an area that houses liquidity. If I see a break back above there, I see my my entry fractal, I believe that closing above here, we should use that as inversion fair value to get to here. But you see how we're not closing above it. It's showing, it's evidence that it doesn't want to close above there. So I would suggest, boom, here. Look at the reaction here. Look at the reaction of price here. But I'd be done for the day though. Of course I could continue trading and stuff, but it's not necessary. If you get 50 points for the day, if If you get 50 points for the day, you're golden. You can easily come in the market and just pick, boom, okay, litmus test, boom, breaker, boom, close beneath, boom, come back up, boom, short the breakout, boom. Where do you want to see it not close above? Must be this up candle here, the last up candle, boom. But I specifically want to see it not close above here, and for potentially 50% of the litmus area, boom. So a short. Where am I shorting to? I'm shorting to get to this area first. So we got